Good evening. Welcome to Capital Market Live on Channels Television. I'm Ladi Williams. It's time to take stock of how your money performed earlier this week. And first, we always start with U.S. markets and the global markets that we track right here. Let's start off with Europe now. We see pan-European stocks 600 close 0.72% higher, with all major bourses. Most of the sectors ending the day positive. That was on Friday. The benchmark added about 1.09%. So we see FTSE 100, that's up 0.98%. So bullish sentiment with most of the global markets that we track. The German DAX, 0.39% up. CAC 40 in France, 7,465 points at 0.41%. Yeah, the European Central Bank slashed rates as expected on Thursday, marking its second 25 basis point cut this year and bringing its key interest rate to 3.5%. Let's get a check on Asia now. Asia-Pacific markets were mixed as mainland Chinese markets hit their lowest since 2019. We'll see the Hang Seng Index there at the lone gain of 17,369 points, up 0.75%, while the Nikkei 225, 0.68% down, followed by Shanghai Composite, 2,704 points, down 0.48%. Let's get a quick check on the U.S. now. In the U.S., stocks rose on Friday with the S&P 500 and the Nasdaq Composite posting the strongest week of 2024 ahead of the upcoming Federal Reserve meeting. Well, this season is all about rate-setting season, and most investors are expecting rate cuts in the world's biggest economy, that's in the U.S. And we see all the big boys there moving on with rate cuts in Europe, but all eyes now on the U.S. We see the tech-heavy Nasdaq 0.65% up, S&P 500 5,626 points, 0.54% up, while the Dow Jones Industrial Average added 0.72%, looking quite good for Friday. All right, let's bring in Olumide Additional, our financial market analyst, to give us a review on what to expect in U.S. markets next week. Good to have you, Olumide.
Yeah, good evening, Ladi. Thanks for having me.
Yeah, so I'm looking at the U.S. CPI data for August. Quite impressive. CPI was 2.5%, added about 0.2%. That was in line with expectations and estimates. But core CPI, that was about 0.3% up, higher than the 0.2% that was expected. But 3.2%, that's what we have for core CPI. So it looks like investors were happy with most of that data, looking at a great performance for most of the bosses. How are you seeing it?
Yeah, the data report brought in mixed signals. And if you understand the fundamentals presently in the market, September looked like a bad month. But this week ended the best in 2024. And that's because we saw bullish momentum across all spectrum, not just tech stocks. We saw utilities, we saw real estate and consumer staples. In fact, Walmart hit all-time high. We saw Walgreens. We saw increased appetite in Iron Mountain. The stock is up 67% this year. What the market is really looking at is that the fact that, well, inflation data seems to be mixed, but it looks like the Fed will definitely bring out rate cut. But the problem now is that while we see significant amount of market participants betting that the U.S. Fed will reduce Fed cut by 50 basis points, I think it's safe to look at 8.25. So next week could definitely be very volatile. But I think when you look across board, you see that investors are really reallocating portfolio to places like I mentioned earlier, particularly the consumer staples. The U.S. economy is pretty much solid, in the good shape. And you could see that the numbers coming in from different economic data still shows a much buffer situation than the Europeans and the Asians. So I think for me, the US Fed has less headache. But going forward, we're entering an election year. So this the coming week, I think investors will definitely also not take risk, so much risk on the table. And we could see that divestment to other markets, particularly front and emerging market like Nigeria, where we saw our dollar bonds oversubscribed based on the fact that the rates offered 9.5% for a dollar bond investment, knowing fully well that the UFL will cut rates. really seem to trigger much excitement. So, Ladi, I think going forward, I think we might not see such rally we're seeing till election has come to play because this has been priced in, and I think it's safe to say that the market is already heated.
Right, and I guess so now, we have good economic news in the U.S. That means good news is actually good news. I'm guessing nothing can stop the expected rate cut, but I guess the question is, will it be 50 basis points or 25 basis points? But let's look at the dollar now. How do you see the dollar going forward with most of these rate cuts expected? I think we're expecting about 4 or 5, going forward. Do you think it's time to just get out of the dollar?
Yeah, good question, Ladi. I think the major decider is the U.S. election. I think a Trump win definitely will keep the U.S. dollar strong because if you look at Donald Trump's policies, despite the fact he wants a weaker U.S. dollar, he seems to support the strong dollar foundation, and that would be bad for the Nigerian naira. But a Harry win definitely means status quo, despite the fact that she has some economic differentials, in fact, of tax and supporting the middle class aggressively. But this month, if you look at the European currency, you look at the British pound, the dollar has a strong support because the European Central Bank has begun cutting interest rate cuts aggressively. So I think the dollar will definitely remain support this year, but I don't see it hitting the strong levels it had in Q2.
Right, those were really, really strong levels, especially when the U.S. Fed started raising rates. So the U.S. Dollar, that's the DXY, actually get to new highs. So thank you so much, Olumide Additional. Definitely looking out for how the markets play out next week. Thank you.
Yeah, thank you, Larry.
All right, so back home, the Nigerian equities market ended the week strong, up over 1%. So the year-to-date returns back to about 30.3%. We see trading activity that varied with volume up and value traded that took a hit there with deals compared to the previous week, 50,615. So we see a rise there, 1.06% for the all-share index. Let's get a check on the performance now, sectoral performance. You see it was mostly green with the banking counter leading, shining there, up 5.12%. We know the banks have taken, the banking stocks have taken a big hit earlier this year, but you see consumer goods also 1.47% up, industrial goods, that's the lowest there, 0.17%. Insurance, that's also financial services, also joining the banking counter, 1.59%. Oil and gas, 2% up. So let's dive in deeper now. We see top gainers, 59.75%. Carverton Offshore taking the lead for the week, 2.54 naira to close. RT Briscoe up about 42%. UPDC PLC also up double-digit. Learn Africa, 22% down, leading the week. The laggards for the week, while Julius Berger, that took a hit this week. Top trades, Jais Bank PLC, Zenith Bank, Japol Gold Venture PLC. Those led the top trades there by volume. Well, join us now to review the equities market performance for the week and other matters. We have Jesu Shetutu Ajagun, Portfolio Manager, Vetiva Capital Management Limited, joining me right here in the studio. JT, great to have you.
Thank you for having me, Ladi.
Yeah, so quite the week compared to the previous week. Negative performance, and we see, a bounce back. But before we get straight into the market, we see the issue there in Borno State with the floodings and, most parts of the north also at risk of flooding. And we also got NIMET actually saying that some southwestern states should also brace or prepare, for rains and, risks of flooding. So definitely natural disasters, not so good, for most of these companies listed. But do you see any companies at risk with what we're seeing in Borno State?
Thank you, Ladi. So what we're seeing in Borno State will most likely see the consumer goods sector definitely take a hit, but there's something they call the lag effect, which is in as much as we are seeing this happen now, we might not see it trickle down into, the input cost for most of these consumer goods company now. So we might see the impact of this of this flood later on trickle down into their performances.
Right, and definitely our prayers, go to those affected by the floods right now. But let's get to the markets there. What would you say was the catalyst last week, or this week, actually?
Okay, so for this week, it was a bullish one for the Nigerian equities market, as we saw about 3 out of the trading sessions close in the positive. And I think another noteworthy thing is that all the sectoral indices closed in the green. However, on the gainers chart, you see that the banking sector, just like you said, appreciated by 5.17%, and this was majorly driven by investors reacting positively to the corporate earnings by banks, and most investors taking positions in the market in anticipation for further earnings results. Zenith released their result, GTCO, Stanbic, and we've seen them declare impressive performances and also dividends. So we've seen that actually come to play in this month. And I think another interesting thing, aside from the fact that we saw the banking sector appreciate, is that the other sectors as well, they also closed in the green. Oil and gas, we've seen the impact of corporate announcement and the improvement in the prospect of this sector actually drive investors' reaction to the performance of the oil and gas sector. And we've seen investors take further positions in this sector, which has led to the appreciation of that sector as well. For industrial, mild appreciation, 0.17%, and that was majorly driven by the appreciation we saw in WAPCO during the week. So that was
quite impressive, and I wonder if this would actually play into next week, because there wasn't much news that pushed the market so high. That's in my opinion that I didn't see enough bullish news. But looking at next week, it's a holiday shortened week. What are you seeing?
Just like you said, next week is definitely going to be a short trading week because of the public holiday on Monday. But I believe we would see investors also take more positions, right, in the market in anticipation for further earnings result, because we would see other companies actually, declare their result, and you see investors take position with a positive tilt in the banking sector.
Yeah, banking is shining at this point.
Yes, it's really shining.
That counter did take a hit, losing that 1,000 level, falling all the way to about 700 points. But let's look at another segment of the market now. I remember in the crypto market, it was all about Bitcoin ETF. When is that? When the ETF is going to come out? It's finally out, and we've seen that excitement of the ETFs. But right here in our capital market, we also have, exchange traded funds as ETFs. Talk to me about this market, this segment, the market, and who should be playing in it.
Okay, interesting. So just like you said, let me just define what an ETF is. ETF stands for Exchange Traded Fund, and just by the name, it's a fund that is traded on an exchange. Now, that fund that is traded on an exchange, like any other stock, tracks an index, which means it's tracking an underlying security, basket of goods, right? And where it gets interesting for ETF is that in as much as, it's trading on the exchange, my buying into an ETF, which is one fund, gives me access to different underlying securities. Currently in Nigeria, we have like over 7 exchange traded funds. We have an exchange traded fund that is tracking the broad market. When I mean the broad market, that's the NGX 30 index, right? And the NGX 30 index is basically just an index that tracks the top 30 most capitalized stocks. So if you feel like, okay, I want to, have an exposure to the broad market, all I just need to do is get an exchange traded fund that tracks that NGX 30 index. And the beautiful thing about this is that the NGX 30 is quite diversified. It has stocks in different sectors: telecommunication, oil and gas, industrial. So that way, the risk exposure, the risk that comes with investing in the ETF is sort of reduced when compared to stock selection. Me just investing in the market, just buying a single stock, and me being quote unquote, be affected by, the downside of that sector. Yeah, so the volatility is just sort of reduced. Right. So once I buy an ETF, it gives me, diversification. And the beautiful thing about it is that if we look at the performances for the exchange-traded fund that tracks the NGX 30, like the Vetiva Griffin 30 ETF, for instance, year to date, the ETF has returned about 31%, right? Tracking the NGX 30, which has also delivered about 20%.
They basically follow what's happening.
Well,
we're gonna drill down on most of these ETFs and find out if you're getting a good buck for your investment, going forward. But we'll take a quick break now. When we come back, we're going to drive deeper into the ETFs traded right here in Nigeria's capital market. Do stay with us. All right, let's take some top stories right there in the market. We see Griff Nigeria PLC, manufacturer and marketer of steel drums, poised to enter the final phase of its delisting from the Nigerian exchange following resolution of outstanding tax liabilities and other debts. Listed on the NGX since about 2011, Griff Nigeria has faced a significant decline in its stock performance, with its share price dropping 57% from 13 naira at the time of listing to about 5 naira 45 kobo, largely due to increased competition and a stagnant market for steel drums. The company's impending delisting was announced by its liquidator, Inam Wilson, in a statement released on the NGX on September 13th, 2024. All right, let's get back to the conversation. We'll be talking about ETFs, and I still have with me right here in the studio JT. I call her JT. She's here, and we're talking ETFs at this point. Thank you for staying on.
Thank you.
So you did mention that ETFs, I feel they're quite good for safe, investors. You don't want to go all in into one stock and, risk actually losing, if that stock, goes down. But some would say when you spread, your risk, then you might not gain that much, going forward. What do you think? How do you, relate that with ETFs?
So I think that's a very good question, right? So me introducing ETF doesn't mean you cannot, invest in other stocks. I think the beautiful thing about ETFs, right, is that aside from the fact that you're getting access to the broad market, if you decide to say, okay, I'm interested in a specific sector, right, in the country, I can decide to say I invest in that ETF, the ETF of that sector, right? So be it banking, consumer, industrial, there's an ETF, you take position, right, in that bit. Now, if I put that in consideration with you just investing in a certain stock, I mean, there's the downside to it, right, which means it can actually perform well and it might not perform well. But beautiful thing about ETFs, take for instance, if I'm investing in like a sectoral ETF, is that by just investing in that ETF, I get access to the, take for instance, like a banking ETF that has like 10 banking stocks embedded in it. I'm investing in that banking ETF, it gives me access to the 10 banking stocks, quote unquote. So if something happens with one, it's more like I'm kind of safe with the others, as opposed to just going all in into one stock. And it doesn't mean you cannot invest in, like, an individual stock. But I just feel like before you even say you want to invest in an individual stock, definitely you have to, if you're doing the right thing, you have to do your research, and you also need to track that stock performance thoroughly before investing in it. The same also goes with ETFs, right? What you can just do is do your research. How has that ETF performed? What are the underlying? So with respect to stock selection issues, it helps you to mitigate that risk of, stock selection issues. And it also helps you to position very well. Some people might be like, okay, this year we've been in a high fixed income rate environment. Which sectors actually benefit from, high fixed income rate environment? Some people might be like, okay, banking sector. Okay, I think now is a good time for me to actually position or have exposure to the banking sector. How do you do that? Get an ETF, as opposed to, okay, which of these ETFs am I, do I need to, invest in? So I think ETF just literally helps you with, or helps passive investors to avoid stock selection issues. And aside from, you know, stock selection issues, another thing ETF sort of also helps you with is the diversification, which I earlier mentioned, and also affordability. With less than 1,000 naira, you can actually get, you know, an exchange traded fund. And mind you, we've had exchange traded funds that, you know, have consistently paid dividends since their inception up until now.
How do dividends work with ETFs?
So because you are investing, so like I said, my buying into an ETF gives me access to different underlying stocks. So if those underlying stocks are paying dividend, the ETF as well would also pay dividend depending on what is in the trust deed of that exchange traded fund. So if I have like a banking sector, which you know for some of the banks they've had like constant dividend payout ratios since their inception, these big banks, so it's more like if they are embedded in that banking ETF, they pay dividends. So it's expected that the banking ETF as well would pay dividends. So I think that's basically it with.
All right, looking at the Vetiva consumer goods ETF, year to date about 43% up.
Yeah.
Year to date, month to date, that's unchanged. And I'm wondering why no action. That was for August.
Okay. Yeah.
Month to date.
Okay, so for the consumer goods ETF, like you said, year to date, 43%. And another thing you also need to know with ETF is like, price changes when you get into the market, when you exit. But if we look at the year to date performance for the consumer goods index, most of the majority of the drivers of that, year to date performance are due to the appreciation that we've seen in BUA foods. I know they are expanding their, with capacity, and that would definitely, impact on. We've seen the market basically just react positively to, that news of their, with capacity expansion and things like that, right? So if you also look at July, right, you see that for July, I think there was a bit of like a dip in, the price of the consumer goods sector, right? And that was basically driven by, price movements. Right, so I think all in all,
and I'm wondering, for that consumer goods counter, seeing that consumers are dealing with inflation, at this point, and we're also seeing a high interest rate environment. So I'm wondering, is that sector still one to look at, if you're trying to invest, knowing that right now we're seeing demand destruction right before our eyes?
So for the consumer goods sector, it's actually interesting because in as much as we have this risk that you've highlighted, we've had certain investors. Another thing you must also look at is they are also at attractive entry points. So we've had certain long-term investors decide to say, okay, I want to take position, right, since these are, at attractive entry points. And in as much as you're looking at consumer goods sector, don't forget there are different stocks that are actually embedded in this consumer goods sector. I've mentioned Boa Foods. Now, Boa Foods wants to increase, their wheat capacity, and which is where the ETFs actually comes into place, because for an investor out there, it might be more like, okay, I really want to, ride the haul with, the consumer goods sector. Since they are at attractive entry price, it might beg a question of, okay, which of these consumer goods stocks should I be investing in? But with an ETF, you really do not have to, deal with those issues. Or you
just put all of your choice together.
If you want, and if you want to maybe, after investing in the ETF, you feel like you have affinity for other individual stocks, you can then decide to, add that to your bucket list.
And what are you seeing, going forward for, demand for ETFs for investors?
I think that the ETF is actually poised for growth for certain reasons. Number one, because it, literally tracks an index. It's with an ETF, you're able to, easily track the performance. My idea is you're supposed to mirror a certain index. So how is that ETF performing? Is it tracking? Is it serving its objective, tracking the index I'm supposed to, track? And aside from that, other things we also need to look at for exchange-traded funds is I feel like we'll still see more investors actually get into ETFs, right, because of its affordability and also the diversification benefits that, exchange-traded funds offer to the market. Just like you said as well, mentioning the Bitcoin ETF, I mean, we're beginning to see different ETFs actually, come up. We don't just have equity ETFs, we have other type of ETFs, new gold ETF, different ETFs really. So I feel like the exchange-traded fund is actually poised for growth, and most especially, it's quite affordable. It's very affordable for anyone.
Right,
Once you do your numbers,
affordable sounds
yes.
good to me. Right now with everything, expensive. Thank you so much, Jesu Shetutu Jagun. I call her JT, Portfolio Manager, Vetiva Capital Management Limited. It's great having you today.
Thank you for having me, Ladi.
Thank you. All right, let's look at some stocks to watch for the week. Yeah, we see the big movers this week. The likes of Julius Berger took a beating, this week, and we see other stocks actually looking good. We see the top gainers there. If you look at those top stocks traded this week and the gains that were made, Julius Berger took a beating there. RT Briscoe, UPDC, PLC, Caverton Offshore Support Group. Those are the top gainers for the week. So not much news, to those stocks, but they really did well. But going into next week, what can we expect? Well, we're having inflation numbers coming out. That should be tomorrow. We see Julius Berger. They did, get some good news earlier this year, with all the construction work going on right now. So we've seen a lot of investors, cash into that. Visit Cousins, not too good. Looking at the results that came out for the half year, we saw some losses there. So it remains to be seen what will happen to these stocks going into the holiday shortened week, as the federal government has declared Monday 16th public holiday to mark Eid al-Maulud, that's the birth of the Holy Prophet Muhammad. So definitely I know investors are still going to play in the market tomorrow, just 4 days. But that's a wrap on the program today. Thank you for watching. Remember, you can catch us again on our YouTube channel. You can also visit our website for more updates. I'm Ladi Williams. Thanks for watching, and see you next week.